All right, let's get a look as we are wrapping up this hour where things stand again for the Dow. You're talking about the Dow Industrials just over 8.5 points below that all-time closing high, sitting right now at 11,714.
Energy is also a big story. Morning Power Lunch will have all of that, but for now, we're done.
Yeah, that's it. That does it for Morning Call. I'm Becky Quick.
I'm Liz Klayman. As we mentioned, Power Lunch is next. Bill and Sue are following it all.
We'll pick up the ball from here with the Dow that close to its all-time high. Yes, it's just another number, but it does allow us.
It's a biggie number.
Well, it allows us to ponder where we are today compared to where we were back in January of 2000. The last time we were in this area, that was very much a technology, new economy sort of a rally we'd had to that point. Now it has been the old economy that has led the market higher to this point, and we stand just a few points away from that all-time high. Welcome to Power Lunch for this Wednesday. I'm Bill Griffith.
And I'm Sue Herrera. And the old economy, the large cap stocks, finally getting their day. And investors have waited an awfully long time for this as the Dow approaches that magic number of 11,722.
And among those are among the stories we're watching right now. Of course, the question is, can this old economy rally keep going? Does it have legs? We'll be pondering that as well over the next couple of hours here.
And one of the things that has made this whole move so fascinating is the fact that we've also been seeing in the last few weeks a rally in the bond market. So we have record lows in interest rates at the same time that we see the stock market moving to multi-year highs in the S&P certainly, but close to this all-time high in the Dow Jones Industrial Average. And it's a situation we don't often see, and we'll talk about what that means net-net for the economy.
We're going to be rather facile with our programming over the next couple of hours, responding to market developments as they occur, but we do have a couple of things planned that we hope to get to. Of course, tomorrow, the House Energy and Commerce Committee will be holding hearings looking into Hewlett-Packard and the pretexting scandal, if you will. We will talk to a couple of members. We hope to talk to a couple of members, time permitting, news permitting, a couple of members of the committee who will be asking the questions tomorrow. And we also have a lawyer whose job it is to prep executives before they testify, as Mark Hurd and Patricia Dung, among others, are scheduled to do tomorrow.
If they testify, that's the big question as well. Will they take the fifth or not? So we have a terrific show. What are we, about 9 points? I hope it happens on our watch.
We just want to get it done and get past it right now. But we want to show you how we do stand at the moment. The Dow Industrial Average, the average of the moment right now as it does approach the all-time highs. We're up 42 points right now at 11,712. The NASDAQ, let's all remember, NASDAQ 5,000 6 years ago, not even close, not even half of that level. That is what we were talking about. The changing complexion of this market in the last 6 years, where technology fell by the wayside for the most part, and it was the old economy, the industrial sector, that has performed well. We're up 8 points on the NASDAQ at 2269. The S&P at about a 5.5-year high right now, but it also not near its all-time highs, up 2+ points at the moment at 1339. As for energy, we've had inventory data out this morning, which has caused some volatility, as you can see there. Guess when that report came out? It was around 10:30 Eastern. We're down 40 cents on light sweet crude. Unleaded gasoline also moving lower after the report came out, down 1.7% at $1.4660, while natural gas today is down 5+%. Now at $4.28. Let's get to our live team coverage. Scott Wapner will check in from the NASDAQ in a moment. Sharon Epperson will have the inventory data on energy at the NYMEX. Rick Santelli, it's a volatile day for the interest rate arena because of some economic data out today. He's in Chicago with that in a moment, but let's start once again with Bob Pisani, who has had his hands full at the New York Stock Exchange today. Bob?
Well, that's what we like here. Hey, listen, this rally is all the more remarkable because of that lousy durable goods number that came out at 8:30. We can't dissect it, but listen, folks, it was not good all around the board. Futures dropped about 2.5 points. We had a negative open, but within 10 minutes, the market moved to the positive side. Why is the high on the Dow good? It's good for investor confidence. By itself, it doesn't necessarily mean anything, but it doesn't mean your portfolio is hitting new highs. As Bill has rightly pointed out, the S&P 500 is 13% below its historic highs. The Russell 2000 about 7%, and the NASDAQ, well, NASDAQ's about 55%. But the mood is optimistic down here. I want to try to bring in some traders here very quickly. Look, floor brokers. They're standing right here. What a coincidence. Ted Weisberg, Warren Myers, and Jimmy McGuire are here. One quick question, yes or no? Bullish or bearish? Just bullish or bearish?
Bullish.
Bullish. Bullish on the record, yes.
Oh, God knows what he's going to say off the record. Heavens, I'll do that a little bit later.
On the Dow record.
Jimmy, on the Dow record, says, Jimmy, why are you bullish right now?
Well, we have the momentum behind us. I think the fundamentals are all there. It's been, if you look at the price of oil recently, that's certainly helping the cause. I think we're going to get through the old high, and but I mean, we may see a bit of a consolidation after that. I wouldn't be surprised if we see a bit of a pullback, much like the marathon runner who's finally gotten to the finish line, needs to take a bit of a rest.
How about that, Teddy? Because in the past, we have seen some resistance when we get breakthroughs into new highs on the Dow, and particularly on the S&P 500. After this quarter is over here, and we get this natural little buying, are we going to still be able to sustain this momentum?
Well, it's interesting because you can find plenty of reasons not to own stocks, but the market continues to climb this wall of worry, if you will. And you have two things in place, one of which Jimmy mentioned. You have the oil prices coming down, and you have a pause in interest rates going up, in fact, maybe even going lower, and the combination of those two things certainly is going to be good for the market.
And Warren, that, of course, is the big factor here, the decline in oil, decline in interest rates. That helped the market in August. It's also continuing to help the market in September, yet we're getting mixed economic data. This durable goods number was crummy today. How much more can we sustain of negative economic data and the market keeps going up?
Well, you also have to look, we're ending the end of the quarter, which is typically a time where a lot of people window dress and buy a lot of the stronger issues. I think that's been a momentum adder as well, and I think that's what's going to get us through this new Dow record. After that, as Jimmy said, I think we might have a slight consolidation, let everyone regroup. With the environment that we're in now, though, I think that consolidation won't be that significant.
You know, 4 years ago, we were at a bottom, October 2002, and who would have guessed that energy stocks and utilities would be the market leaders in the last 4 years? I certainly wouldn't have guessed. What are they trying to rotate into now that's going to be the leader for the next couple of years?
I'm not saying they're rotating in it, but I would love to see the techs be a leader again. I think that's an area that's been up and down, bouncing around a little bit. I'd love to see some strength there. I don't think you're going to get it out of the retailers. I don't think you're going to get it out of many other areas. I think if the techs can survive and come out with some good earnings, they could lead this market higher.
Ted, you've been down here for decades. Where are your customers putting their money right now?
Well, I think clearly they have been gravitating to the big cap stocks, big companies that are proven earnings growers, good dividends, and I would like to say in terms of the group that I think that the market will need to take it forward to substantially new highs will be the financials, because they are the biggest segment of the S&P, and they are a direct proxy on the economy.
What will be the fourth quarter sector leader, Jimmy, quickly?
These guys hit it on the head. It's the techs and the financials. Those are proven market leaders. That's where you want to see strength coming from. And I think this market is, this rally is broadening out somewhat. We're starting to see it spilling over to other sectors as well.
And techs and financials, the two biggest sectors in the S&P 500. I'm going to be here on the floor, Bill, for the next couple of hours, talking to you and talking to the traders. Right now, let's go over to Scott Wapner. He's standing by over at the NASDAQ. Scott?
All right, Bob, thanks so much. Yeah, we're good for about 9.5 points here. But I have to say, I mean, it is kind of like we're watching the party down there with our faces pressed up against the glass, because as we mentioned before we threw to Bob Pisani, 2270 is where we stand now. But putting that into perspective, NASDAQ 5,000 back in the year 2000. So we do have a long way to go until we're going to be back to any kind of record. That said, it has been a very strong September. We were up 3.5%, and that was the best September since 1998, according to Rich Peterson over at Thomson. There's also been a lot of talk how this run-up and this rally has been a technology-led rally, and Art Hogan, who I spoke with just a short time ago, expects this to continue. And let's look at some of the reasons why. He says that right now we're seeing a budget flush going on, and that means that companies have, all of this money to spend on technology, and with the year winding down, either they spend it or they lose it. So they're spending money right now. Another reason, strong M&A activity. We've got software companies making deals. We've got a lot of other companies talking as well, and also new products for the holidays. You always see this. We've got new games coming out. We've got MP3s. We've got some other new toys coming out for the holidays. So that expected to be a boon as well for technology companies. You put that all together, and you have a pretty strong outlook. In terms of today, that durable goods report really seemed to impact computer hardware stocks. And we've seen, a number of the big name hardware stocks sell off today. Dell and Apple and HP as well. HP bouncing between positive and negative territory throughout most of the day, but those were certainly getting hit. We saw fewer orders and shipments for computers, so that was having an impact here as well. Also, internets were lower. Names like eBay, Amazon, Overstock, and Yahoo were also lower on the day. Let me hit on a couple of individual stock stories, I should say. Intel up 3% today after a judge dismissed part of AMD's antitrust case against Intel. That suit claiming that Intel held a monopoly in several international markets in Europe and Asia, although the judge ruling that many of those claims were beyond the reach to U.S. law. Let me also talk about Red Hat because it's a big loser today, down 23% on downgrades from three banks, Prudential, Jefferies, and First Albany. Also, JMP cutting the target there to 27 following some disappointing earnings. And I will end on Fox Hollow. Talked a lot about it this morning. It's up more than 20% right now. Merck going to pay $100 million to Fox Hollow over the next 3 to 4 years, also buying an 11% stake. This company makes a device that extracts plaque from your arteries. They then give it to Merck. Merck studies it and tries to develop new drugs. That's the story from here at the NASDAQ. And guys, forgive me, I forgot where I'm going from here. Sharon Epperson down at the NYMEX.
I'll take it, Scott. Thank you. Well, you know, there may be this party going on underway at the New York Stock Exchange with the Dow near that record close. And yes, oil prices falling is contributing to it, but there's certainly no party going on here over that fact. We were lower across the board until just a few minutes ago. Heating oil turned positive, but we did see all of the products drop on that inventory report. That really surprising build in gasoline supplies threw everybody for a